You're not alone when thinking of the best stocks to buy or invest in this new year. We've come to your rescue today. Make sure you stay until the end of this video to find out the best stocks for this year, 2023. Today, we'll be revealing the best stocks that will yield profitable income for you this year. Smash that thumbs up button now before we proceed. Before we dive in, if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. In other words, one of the sweetest ways to be successful in the stock market is to hold on to shares in organizations and companies with very solid businesses for long-term investments. By doing this, you can secure yourself from short-term economic declines and sudden fluctuations in the stock market. Now let's begin. 2022 was a prime instance as a sell-off saw declines in numerous stocks. Regardless, companies with the biggest business will no doubt, be able to navigate this challenging time and come out ahead. So without further worries, we have some stocks you can buy in 2023 and hold indefinitely. Apple. Apple is one of the effortless stocks to recommend in light of the most unweaving dam and for its products and swiftly expanding services business. The company's stock is down 23% year over year after a sell-off in 2022. However, Apple isn't so bad off when noting the 33% to 40% stock declines that its peers such as Amazon and Alphabet experienced in the same period. Last year, macroeconomic headwinds highlighted the strength of Apple's business with the constant need for the stock. For example, in the third quarter of 2022, global PC shipments for the industry fell 15%. However, Apple reported the only growth among its competitors, up 40.2% during the period. While the company's hardware remained in demand, its service business proceeds to boom. In fiscal 2022, services revenue increased 14% year over year to $78.1 billion, while iPhone revenue rose by 7%. In addition, services reported a 71.7% profit margin, while products came in at a 36.4% margin. Apple proved the resilience and reliability of its business in an economically challenging year. Its stock price has grown 203% in the last 5 years, despite a recent sell-off. Apple has numerous highly anticipated products that is expected to be released in 2023 and continued growth in its services. As a result, its stock is a screaming buy this year and one you can hold for life. Clorox Company. To begin with, the Clorox Company is an American multinational manufacturer and marketer of consumers and professional products. The company operates several business segments, including cleaning, lifestyle, household, and global. Notably, the company's most well-known brands include Clorox Bleach, Kingsford Charcoal, Hidden Valley Dressings, and Vitra Water Filtration product. Recently, Clorox announced that it will release its second quarter fiscal year 2023 results on February 2, 2023. Furthermore, CLX offers its shareholders a quarterly dividend of $1.18 per share. This results in an annual dividend yield of 3.23%. Meanwhile, looking forward to the latest trading action, CLX stock is trading at around $146.11. Amazon. You know Amazon as the mega e-commerce retailer. What you may not know is that Amazon does more than sell products online. For instance, Amazon is the world's largest cloud computing provider. The Amazon Web Services, or AWS platform, has a larger market share than Microsoft's Azure or Alphabet's Google Cloud. Amazon earns commissions and sells warehousing and fulfillment services to third-party sellers, Amazon.com. Amazon also generates revenue through Prime, Kindle Unlimited, and other subscription services. The e-commerce giant physical stores, including the Whole Food Market chain, were purchased in 2017. The bad news is that since the 1st of January 2023, Amazon's stock price has fallen about 50%. Here's the good news. It's been a challenging position in 2022 for a better 2023. The profit comparisons will be much simpler for one. More importantly, Andy Jassy, the CEO, is focused on streamlining the company's cost structure. Amazon spends huge money in areas that aren't profitable, including its international and device segments. The efficiency focus should be urged in strategic changes in those areas, including cost-cutting and ongoing activities like package delivery. Amazon repurchased billions in common stock in 2022 for the first time since 2012. The company has $6 billion remaining on its share repurchase authorization. Progress share buybacks would support higher earnings per share later. On top of those factors, Amazon's stock price looks cheap right now, relative to its history. The consensus price target for Amazon is about $140, while the stock currently trades below 95%. Another great stock to buy this year is Dollar General, or DG. Let me quickly do an overview of Dollar General. For those who are just joining the stock market, Dollar General is an established chain of discount stores selling consumer staples for low prices in neighborhood locations. The company sells its privately branded products alongside popular goods from Clorox, Procter & Gamble, Kellogg's, General Mills, Coca-Cola, and many more. There are more than 18,000 Dollar General stores in 47 US states. Dollar General stock is up 3% in 2022, even as the S&P 500 has fallen close to 20%. Throughout this year, the chain has reported an increase in foot traffic and in how much customers spend at each transaction. The pressure of higher costs is coming on Dollar General though. In response, company leaders are focused on streamlining their supply chain. Those efficient efforts can help with the current inflation trend, but will also create long-term advantages. Eli Lilly. Eli Lilly is a pharmaceutical company that formulates important treatments for diabetes, Alzheimer's, obesity disease, immune system disorders, certain cancers, and COVID-19. The company distributes its products around the world through wholesale distributors and marketing agreements with other pharma companies. Eli Lilly stock is up 31% in 2022, an uncommon bright spot in a down market. The company benefited from a quarterly launch of its type 2 diabetes drug, Mounjaro, plus growth from great cancer drugs, Verzenio, migraine drugs, Emgality, diabetes drugs, Trulicity, and many more. The company revenue grew 7% on a constant currency basis in the third quarter. Earnings per share in the same quarter increased 12% on a non-GAAP basis. Economists and analysts extensively expect Lilly's momentum to continue with appreciation to a strong product pipeline. Before the end of 2023, Lilly should launch 4 more products plus another major indication for Mounjaro. One product to watch is donanemab, a treatment drug for early-stage Alzheimer's patients. Etsy. 2018, before the pandemic, that's COVID-19, Etsy was a fast-growing stock by connecting craft makers with customers looking for something a bit more out of the ordinary than the actual stream economic fare. During the COVID-19 pandemic, e-commerce got a very big boost, but Etsy skyrocketed, growing at more than thrice the rate of overall e-commerce. It helped that Etsy was a natural fit when people wanted distinctive face masks. Its growth has been impressive across all product categories. In the second quarter of 2022, Etsy's marketplace sales quantity was up to 141% over comparable pre-pandemic levels. As you've been with us throughout this list of best stocks for 2023, make no mistake, Etsy is one of them. Few e-commerce go head-to-head with Amazon and survive. Etsy has not just withstood Amazon rolling out its own handmade items platform, but it won. These could still be the early days of excellent long-term growth stories. Because of its strategy and brand stability, Etsy's market opportunity is in the hundreds of billions of dollars, and it has just started to scratch the surface. With the stock falling significantly in the recent growth stock downturn, now could be a great time for patient long-term investors to take a closer look. Shopify. This is a platform that is designed to allow various kinds of businesses to trade their business online, with a certain focus on empowering smaller businesses and growing alongside them by establishing long-term relationships. Shopify offers a subscription plan starting at $28 per month for businesses, and it also offers many adjacent services that help businesses operate smoothly, such as logistics and payment processing solutions. Shopify's one-stop shop approach to enabling e-commerce has turned it into a powerhouse. It now has more e-commerce sales flowing through its ecosystem than any other company besides Amazon. Furthermore, Shopify could be just getting started. The platform has generated over $6 billion in revenue over the past 4 years. But this is just a fraction of its estimated $154 billion and growing market opportunities as more retailers shift their focus to online marketing. E-commerce is still in its relatively early stages, making up less than 15% of retail sales in the US. Shopify has the number 2 share, giving it a large lead over many of the world's largest retailers. With shares down sharply in the recent market downturn due to recession fears and signs of a slowdown in consumer spending, Shopify looks like a clear choice for the best stocks to buy in 2023. Coming to the end of today's video, which of these stocks would you buy first? Let us know your thoughts in the comment section. Also be sure to subscribe and give this video a thumbs up again. Do you like this video? Now see this.